You've probably seen the headlines about the US job market, right? But today, we're going to dig a little deeper. We're going to look at the story the official numbers aren't really telling you. So let's get right into it.
So, this is the big question on everyone's mind, isn't it? The reports come out, the numbers look a certain way, but does that really match up with what people are feeling on the ground? Just how strong is the job market, really?
Okay, check out this number. This might just change how you see things. For the last couple of years, the initial reports were all about strong job growth. But, and this is a big but, recent revisions show that 1 million fewer jobs were created than we were first told. 1 million. That is not a small correction, folks. It's a massive adjustment that basically rewrites the entire story.
And that brings us right to our first section, the job market mirage. It really turns out that the first picture we were all getting was, well, a bit misleading. We need to take a much closer look at the updated data to see what's actually been happening.
So here's the bottom line. The latest revised data paints a much weaker picture of the job market for 2024 and 2025. And I want to be clear, this isn't just some minor tweak. It fundamentally changes that whole narrative of economic strength we've been hearing about.
All right, so if 1 million reported jobs basically just vanished from the data, where did they go? Let's break down which industries got hit the hardest and see who the winners and losers really were.
What's really striking here is just how wide this slowdown was. The revised numbers show it wasn't just one or two sectors feeling the pinch. No, we're talking about job losses across the board in hospitality, government, construction, finance, transportation, retail, and manufacturing. It was almost everywhere.
Which, leads to a pretty logical question, doesn't it? If all these major parts of the economy were actually losing jobs, where on earth did the reported growth even come from? Well, the answer is, it's incredibly concentrated.
And this chart, wow, it tells you everything you need to know. Of the roughly 1.7 million jobs that did get created over those 2 years, a staggering 1.6 million of them, that's 94%, were in healthcare. Just think about that. All the other industries combined only added about 100,000 jobs. The entire job market was basically being held up by one single sector.
So this gets us to the why of it all. Why was job growth so sluggish and so focused in one place? Let's dig into the key factors that were putting the brakes on the rest of the economy. Before we dive into the nitty-gritty, it's important to kind of get the overall vibe. There's been this persistent feeling of economic uncertainty just hanging over everything, and that's been a major drag on companies hiring and investing.
And here are some of the specific drivers. Beyond that general uncertainty, you've got unpredictable tariffs messing with trade. You have massive amounts of money flowing into AI data centers instead of into hiring people. Then that same AI is starting to replace some job functions. And on top of all that, you have stubborn, persistent inflation that's squeezing budgets for companies and for you and me.
Okay, now let's connect all these big economic trends to what really matters most, the impact on your wallet. This is where all that data stops being abstract and hits home, right at the kitchen table. What we're really seeing is a perfect storm. So on one hand, you have a slow job market, which makes it harder to get a raise or find a better paying job. And on the other hand, you've got high inflation, which means the cost of everything, groceries, gas, you name it, is going up. And that combination creates an incredible amount of pressure. That emotional stress from worrying about money, it translates directly into the very harsh reality of mounting bills, negative bank balances, and for a lot of households, growing debt.
This quote from the source material just says it all, really. It's not just a feeling, it's a documented fact. The average American household is carrying a lot of debt, and it's getting harder and harder for them to keep up with the payments in this kind of economy. So, looking at this new reality, what can you actually do? It can definitely feel overwhelming, but there are proactive steps people can take to try and navigate these choppy waters and get some financial control back. Let's just break it down into 2 clear, actionable steps. First, now's a really critical time to reevaluate your household budget. Trim where you can, track every dollar. And second, for a lot of people, it means seriously exploring additional ways to bring in income, just to bridge that gap. And this is pretty much what that second step looks like for a lot of folks. A side hustle or some freelance work isn't just about extra spending money anymore. For many, it's becoming a necessary strategy to build a financial buffer and just find some stability in a pretty tough economy.
And that really leaves us with a final question to think about. The economic landscape is clearly shifting right under our feet. So when you look at your own situation, what moves will you have to make?
What's it going to take for your family to not just get by, but to actually get ahead?